Let's get to our wrap the week segment. We're going to start very quickly with a poll. We have polls running all the time, excuse me, on StockCharts TV on that main page, but also on YouTube and elsewhere that you consume our content. You'll probably see some polls. Answer them as much as you can, because it's a great way to sort of keep a dialogue going between all of you and what you're seeing and what we're thinking about as well. The question was, know your indexes. Which 3 stocks were added to the Dow in August 2020? So it's a bit of a, there is a right answer to this one. This is not a poll in terms of how you're feeling. This is actually a legitimate question that has an answer. And 75% of you got this one correctly. It's CRM, Salesforce.com, Honeywell, and Amgen. 3 stocks and 3 others were removed. And the others were sort of were misleading. Usually 2 of those were in the Dow, but something like Tesla is not a Dow member in the first answer, for example. So, the reason I ask you this is not to try to catch you off guard, but it's more to illustrate the fact that there are fluctuations in these indexes. And when you think about the Dow Jones Industrial Average and you're looking at the performance over the long period of time, you have to remember that the further you get away from today, the less and less accurate that representation of the Dow actually is, meaning it's not looking at the same 30 stocks and how they've evolved. The members of the Dow have changed essentially 100% since they were originally designed. In the Fidelity chart room in Boston, one of the iterations of the chart room, we actually had a chart going all along the hallway leading back to the chart room, and it tracked the members of the Dow and how they change. And you noticed, what I noticed as you walked along the wall, is how many changes there were. So with everything, with the Dow, with the S&P indexes, with any index, there's an index provider that is subjectively determining what is in that index. And so when you see the S&P at a certain value, remember that's a changing basket. And with things like the S&P 500, not as much with the Dow, but you'll definitely see changes in the stocks because big institutions will have to allocate in and out of those names as a result of them being added or subtracted from the index. So that was a great, hopefully a poll to get you thinking. Always stay on top of index member changes because there can be some fluidity related to those changes. Let's continue to wrap the week. What we're going to do is just look at how the week has evolved. We'll look at some of the changes today and then hit on the Mindful Investor Live ChartList, which is really our main way of assessing changes from week to week. So today, the S&P certainly by any measure finishing stronger, closing just below 3,300. This is after, we've touched 3,200 to 3,250. There's sort of that main congestion area. We've rallied 100 points from up from 3,200 now. The NASDAQ leading the way even further with the NASDAQ 100 up 2.3%. Mid caps and small caps all up, but up a little less. The VIX coming lower down towards the 26 level. The dollar stronger again today, which is a theme we've talked about. Bonds essentially finished flat with the TLT around 165. And then looking at commodities, gold and silver off a bit. We've talked about that long-term rotation in gold and silver. Both of those charts, feeling weaker rather than stronger. And it's key support levels that you should be looking for, I think, in those areas as well. Commodities as a whole finished essentially flat. Let's look at the week-to-week changes very quickly. I'm going to update these really quick, which might make my labels look a little goofy, but not too bad. So let's see. This is since last Friday's close to where we're in, and these might be a bit of a moving target as we digest all the closing prices, but should be pretty close. The NASDAQ finishing in the most up for the week, almost 2%, eclipsing the dollar just with today's rally led by technology. The dollar up 1.7%, bonds up just below 1%. Those are the 3 sort of key groups in our asset allocation discussion that finished in the green. On the downside, you had the S&P down 0.6%, Bitcoin down 1.8%, crude oil 2.4%, small caps and gold leading the way lower. And again, gold, we've talked about the long-term trajectory of gold and how this weakness is really feels like more of a tactical weakness within the longer-term uptrend, but really gave back a lot, 4.5% just this week. Looking at the sort of styles and relative movements here, again, the NASDAQ up pretty good. Let's refresh this just really quickly to lock in the closing prices, about 2%. Frontier markets actually up 1%. This is one of our 3 and 3 charts this week. And again, frontier markets I find is usually off people's radar. In general, things that are working I want to know about. And so maybe interesting to see what's included in there, what sort of exposure you're getting. S&P, as we mentioned, down a little bit. Everything else underperformed the S&P for the week. Mid caps, small caps. This is EFA and EM are the 2 here developed as EFA. Emerging markets is the EEM ETF, both down over 3%. So, really the U.S. finished down a little bit. A couple things, the dollar, frontier markets, the NASDAQ able to finish a little more strongly. Let's look at the sector rotation here very quickly, and then we're going to get into the longer term charts. So this is the daily RRG. We're going to look a little more closely at the weekly RRG coming up on Monday's show, but just today to illustrate this rotation, you can see how everything's essentially going north-south right now. And what that usually means on the RRG is essentially further to the right means it's outperforming. So these are all things that have been outperforming going up through the last couple of days. Further to the left means it's underperforming. So communication services, technology have been underperforming, but you can see how they're going vertical, which means it's still underperforming, but the momentum is sort of coming off of that downtrend. So this is sort of the direction of improvement if it could be heading northeast. The direction of deterioration, what I call, would be heading southwest. And you can see materials, consumer discretionary, financials, industrials, pretty much everything over here sort of rotating down in that direction. So it's sort of telling you that the relative winners have still been industrials, materials over here, but you're starting to see some lessening, tapping the brakes a bit on the relative downtrend in communications and technology. And in terms of something I'd be looking at going into next week, this RRG, the daily RRG, and seeing if this rotation continues and if tech and communications continue northeast, I think would be very, very telling. And that would certainly, could fuel some optimism about some recovery in some of those stocks that led the way and really struggled over the last week or two. If we see if there's a bid coming in for those long-term charts on the relative basis. If, however, what you could do is get a bit of a rotation back southwest and sort of an alleviation of this is just a short-term rotation, and then you get back into the primary trend, which is has been dominated by materials, industrial, some of those emerging relative performers. That would be a signal I would be potentially looking for there. Let's continue our discussion here, going through the Mindful Investor Live chart list. If you've not caught our Friday show before, we refer to this same group of charts every Friday, and hopefully this inspires you to think about your own weekly chart routine. I'd encourage you to have a set time during the week where you go through the long-term charts, see how they've changed week to week, and make sure that your models, your thinking, your overall assessment of the conditions are updated so that you have a sense of what you're looking for over the next 5 trading days. If you've not seen this before, the way to access this on your StockCharts login is go to articles. You'll see my blog called The Mindful Investor, and at the very top of my blog, there's a link for this live chart list. You can copy it right into your own login and follow along if you like. We're going to start with the market trend model. This is a long-term model that we've followed for a long time and essentially is weekly data, and it's driven off of the 21 and 34-week exponential moving averages. That's the blue and the red lines here. The long-term model turned positive in June, has remained positive, and to be honest, it would have to sell off pretty dramatically to register a sell signal there. Not quite there, but nowhere near it, to be honest with you. It's still in bullish mode, which is about right. The medium-term model was close to signaling, and earlier in the week when we were trading down to the 21-week moving average, this was actually really close to a sell signal. My thought was, boy, if we could, if we could continue down a little bit further, you might register it. But the SPY actually recovered, and with today's strength, sort of alleviated that sell signal. So we did not lock in a sell signal based on this Friday to Friday close. The weekly PPO, just using the traditional settings. What I call the short-term model is just looking at the closing price versus the 5-week exponential moving average. We remain below that. So it's short-term, sort of the tactical time frame bearish signal, the medium-term and long-term trends both remaining positive at this point. A daily chart of the S&P, we've talked about the breakdown below 3350. We talked about the breakdown of the 50-day moving average, excuse me. We've now done that, and we talked even yesterday about this trend line connecting the high. So this is taking the high from September, the first week, the high from mid-September, and we touched it almost to the tick today. We didn't close above it, so it's still in play, but essentially, I think going into Monday, one of the main charts I'll be looking at is this one right here to see if we're able to follow through, break this trend up. If we're able to do that, get back above 3350, above the 50-day moving average, I would certainly start to reassess the proclamation I've made about the potential for further downside from here. It's all about whether we hold around 3,200 to 3,250. We've now hit there. The question on the other side is, do we hold this trend line? Do we remain below it? One of those things has to break next week. Either we break to new swing lows below 3,200, or we break above this trend line. I think whichever one of those happens, and really it's going to be the the 50-day moving average I think I would be most keen on noticing. One of those has to break, and I think the direction of that break will tell you about the momentum, either the buying power, the selling pressure that's driving investors going forward. This is a breadth measure we've looked at pretty regularly. It's the S&P with the cumulative advanced decline lines for common stocks only, for the S&P, for the mid-cap index, for the small-cap index. I put the little horizontal lines keying in on that first pullback off of the June highs. And if you think about it on a price basis, we made a new swing high there. We pulled back, and then we sort of broke on and made new highs in mid-July. And I think focusing on that pullback level for all of these is kind of important. We've now made lower peaks in all of them. We've now broken down through to a new swing low for the common stock only index. For the small cap index, the mid cap index is not quite breaking it, and the large cap one is nowhere near it. So overall, it's been a weakening breadth picture driven by small and mid cap stocks. We've confirmed sort of that short-term sell signal for the S&P, and so I'll color code this red because we've made now a lower high and a lower low. So on that tactical time frame, it's more negative. This isn't updated through today, so you'll see all of these tick up most likely with today's rally, but overall worth keeping attention to. You know, as I'm talking, I'm thinking about the breadth picture, so I'm going to jump back here and look at percent advanced decline or see what sort of day we had. Yeah, so it was a nice rally, right? So, you know, stocks finished higher today, but only 70% on the upside. It wasn't a, you know, everything up. So it wasn't like a 90% update, which would tell you that's, you know, pretty unusual to get a big 90% update during a downtrend. That really only happens in bullish phases. In bearish phases, you tend to get 90% down days. And Wednesday of this week, I've, you know, debated with some peers in the industry as to whether it qualified as exactly one. 89.9% for me is close enough to say that was a huge washout day. So today, not as positive as Wednesday was negative. And I think the negative days outweighing the positive days tells you a little bit about the characteristic, the environment that we're in. So just want to divert there for a moment and point that out. This next chart is actually looking at new highs and new lows, and it's important to know we're starting to see some new lows this week. Last week, we'd seen essentially zero, and on the S&P, you only had a couple stocks making a new 52-week low. But if you look at the New York Stock Exchange, you had a handful, and again, this is out of thousands of names, so it's not like every, you know, a bunch were down, but 50 stocks making a new 52-week low. That's a non-zero number, and you're seeing more and more of those. I think going into next week, if you see that increase, that would certainly tell you, even if the S&P is holding up, that there are plenty of stocks kind of going lower still, and that's kind of a concern. You know, speaking to that, and we're almost at the end of the wrap the week segment here. You know, speaking of that, looking at breadth in the form of stocks above their 200-day and their 50-day, one key benchmark for me is, are we able to remain above 50%, which we did. You know, going through yesterday's close, we're at 54%. I don't see that breaking today because it's not quite updated yet. But what's really interesting is only 26% of the S&P remain above their 50-day moving average. That's a pretty big drop from almost 100% not too long ago. That's about it for the Mindful Investor Live chart list. The last thing I want to point out is just the relative performance of semiconductors that's really moving a bit to the upside. So that's a chart to pay attention to, potentially seeing if a leadership group like that is able to hold up or not going into next week.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.